Are you wondering the difference between an IUL and a whole life insurance policy? Well, this video, I'm going to outline the pros and cons of both so that you feel very confident before you actually sign on the dotted line. I'm Gail Longnecker, and I've helped hundreds of entrepreneurs, executives, and engineers in the area of life insurance. Be sure to subscribe to my channel below and hit the notification bell so you're alerted when I upload new videos. Let's start with the definition first. An IUL is an Index Universal Life Insurance Policy. We'll go through the similarities. And a whole life policy is a whole life policy. The similarities between the two is that they have death benefit just like every other life insurance policy out there. So in the event of death, if the policy is in force, there'll be a death benefit paid to those named on the policy, usually a spouse, children, somebody in the family normally, or maybe a business partner. And so we have a commonality of death benefit. The other similarity is that they actually insure for life. So it's just not a term of 10, 20, or 30 years, but it's actually insurance for life. As long as the policy is in force, it will cover you to the very day you die. The third similarity is that you can actually pull cash out of the policy. So when you pay the premiums, there's a cost of insurance, and then there's an overfunded portion. And that money you can actually pull out. It grows tax deferred. You can pull out tax free. That's really important when you're doing your retirement planning and your end of life planning. The fourth similarity between an IUL and a whole life insurance policy is that they normally have living benefits these days. So in the event of a terminal or chronic or critical illness, you can actually access that death benefit early and use it for your medical bills or anything you might need with that family. So death benefits don't have to wait until death. You can sometimes accelerate that, called living benefits, available both in an IUL and a whole life insurance policy. Leave a comment in the notes below and tell me what kind of whole life you're looking at, or an IUL, or even why this is even interesting to you. What kind of problem are you trying to solve? Also, check out my other videos, such as IUL versus 401k, and what is an IUL, and tax-free retirement. So the differences between an IUL and a whole life insurance policy. Well, first of all, an IUL, Index Universal Life, the money that you put into the policy, a small portion goes to the cost of insurance, and the rest is the overfunded portion. I recommend you max it out as much as you can. And it's looking at the stock market. It's not invested in the stock market. It doesn't buy stocks, bonds, or mutual funds. It is only looking at an index. So let's say the S&P 500 is 1,000 now, and in 1 year it's 1,100. That's a 10% gain. Then you are credited a 10% gain in your life insurance, your IUL as well. If it returns 15, you might get 15. If it returns 21, there's probably a cap in there of about 14, 15, maybe 8, or maybe as high as 18 I've seen. But the really interesting part too is if that index goes negative, you have a guaranteed floor of 0. Conversely, a whole life insurance policy, you have one and only one interest. It's usually 3 or 4%, and it's boring, and it's 4%, and it's always 4%. It doesn't go up, it doesn't go down. Some people really like that stability. So a whole life insurance policy is really predictable, very stable, has generally the same interest being credited all the time. Okay. A variable, or an IUL, I should say. An IUL is going to go up and down with the market, and oftentimes you can win really big with an IUL. The other differences between IUL and a whole life insurance policy is that an IUL, you have a minimum premium you can put in, and you have a maximum premium you can put in. Now, isn't that crazy? You get to choose what premium you put in? Well, you bet. So I recommend you put in the max, but if you're having a hard year or something didn't come through, or you lost a job, you don't have to pay that year. You can actually skip for the next year, or bring your payments down, your premiums down a little bit. So that's really important for people who like that flexibility. A whole life insurance policy, though, there's one and only one premium. You can't skip, you can't decrease it, you can't increase it. It's the same whole life insurance premium made every time. So if you'd like either an IUL or even a whole life insurance policy for all these benefits, like we've said, for death benefit, for insurance for life, for protection for life, for finding a place to safely invest your money, for all those tax-free cash flows that you can create, for the way it grows, click on the link below to become my client. Now be sure, if you like this video, give it a thumbs up, share it with a friend, and remember to subscribe to my channel. Now, thank you for watching, and build wealth your way.